Hi, this is Troy Norcross with Blockchain Rookies. Today I want to talk briefly about money laundering. There have been a number of people over the last few years that have looked at cryptocurrencies and decided that cryptocurrencies are rife for use and abuse by the underworld, by criminals, specifically in the fact that they can do money laundering. There are a couple of things that I want to point out specifically around cryptocurrency, around blockchain, and then look at how much of this is true, how much of it is not true, and what the future will hold in order to prevent people from abusing cryptocurrency for money laundering. The first thing is to look a little bit about the history. The history of Bitcoin, and we were talking about this recently at a presentation, is that the Silk Road, which was available on the dark web, was the first large commercial enterprise to start using Bitcoin. The Silk Road wasn't intended for trading for legitimate products and services. There were guns, there was pornography, and there were a number of other things. And people liked the use of Bitcoin because it was indeed, to some degree, anonymous. But it wasn't actually anonymous within a certain realm. What they talk about for Bitcoin and for blockchain is pseudonymous. And that's a mouthful all by itself. But if you think about pseudonym or a pen name, pseudonymous means that every transaction had a unique wallet address associated with it. So it was not truly anonymous. There was indeed a marker that said the account that money was coming from, or the crypto was coming from, and the account that the crypto was going to. So it was not fully anonymous, it was pseudonymous. Even I'm struggling to say that word. So now that we've kind of established the fact that it's not truly anonymous, let's look at the next stage. And the next stage is you have to get cash into crypto, and that's being done through exchanges. More prominent ones include Coinbase, Bitpanda, Bitstamp, and several others. These particular exchanges are coming under greater regulatory pressure from all jurisdictions, whether it's the US, the UK, EU, Singapore, or anywhere else. And this means that in order for you to put currency into or to get currency out of, meaning to get fiat into or fiat out of these exchanges, you have to be identified. That means you have to provide an address statement, you have to provide a passport, and that initially restricts and limits the ability for you to be truly anonymous. That means that once the crypto goes in, it's tagged and associated with you. Now that we've identified that the governments are going to be regulating these exchanges, we expect more regulation to happen specifically to prevent money laundering. In the event that you've got a criminal enterprise that's doing something like drug dealing, they're currently dealing in fiat. There are very few drug dealers today currently accepting crypto as part of drug dealing, so they're still dealing with cash. By the time you put cash into crypto and then transfer the crypto and get the crypto back out again, there are enough records in place that law enforcement officials could indeed trace the money, and that's tracing the fiat, by tracing the individual crypto transactions in a public traceable ledger. So can you do money laundering through crypto? It turns out for very small amounts, yes, it's probably still possible that you could do that. Amounts under 50, under $100, those or 100 pounds are indeed transactions that are not closely monitored. Any transaction over 10,000 pounds will be recorded and transmitted according to the regulatory framework and audited appropriately. And all the KYC, all the know your customer checks will indeed apply at the exchange level. The third thing that I want to talk about is getting the money back out. So once you've got crypto, then you have to get it back into fiat. And back into fiat means you actually have to transfer from the exchange back into fiat, back into a bank account. Opening a bank account these days where the source of funds is coming from crypto is tricky, to say the least. There are a number of banks that will not accept commercial money whatsoever, so no business banking account where the source of funds comes from crypto because they can't identify the source of funds. So again, if you want to move it back into fiat, you're going to have to be fully identified, and you're going to have to find a bank that will actually allow you to open a bank account and move funds in that were at some point in the past in crypto. So that's going to be a significant problem. I think that the last thing I want to say about money laundering is we're talking about the way the currency works today, the way that the economy flows today. If crypto really takes off and more merchants begin to accept crypto directly and more consumers own crypto, there'll be less money actually converted. The actual exchange of goods and services for crypto will happen totally within the realms of crypto. And in that particular case, it becomes much more difficult for governments to regulate and for transactions to be tracked. So money laundering in the future could potentially be a bigger problem that's related to the success overall of crypto. This is Troy Norcross with Blockchain Rookies. If you've got a question about blockchain you'd like us to answer in a future video, leave your question in the comments section below. You can visit us on the website at www.blockchainrookies.com or check us out on Twitter at blockchainrookies.